Welcome back to the BSAD 101 accounting video series. Today's video is over Chapter 8, and more specifically it's over petty cash. Petty cash is not a particularly difficult students for typically not a very difficult topic, but I just wanted to briefly cover a couple things on petty cash. As you know from reading Chapter 8, the internal control system, one of the principles of internal control system is to make all payments by check. Checks are more difficult to commit fraud against than say cash. But there are some exceptions. If you have a $5 postage due that comes in, you're probably not going to write the check for $5. So what we do for those small expenditures is companies will typically set up a petty cash system. So we're going to work an example petty cash problem, and as you can see from the PowerPoint we have up here, we're going to again involve the Kidd Company. So let's see what's going on here. It says on April 1st, Kidd Company decided to establish a petty cash fund by assigning an employee, Lindsay, to be the petty cash custodian. The fund is established with a $300 in funds. Prepare the journal entry to establish the fund. Okay, first thing we're going to do is just establish the fund. We're taking $300 out of the bank and we're putting it into the petty cash fund. Petty cash fund could be as simple as a drawer in our petty cash custodian Lindsay's desk, a drawer with a lock on it. So we're basically taking $300 out of the bank and we're putting it into the Lindsay's drawer. So we're going to debit an asset called petty cash, and we're going to credit cash. They're both assets. We're just taking cash out of the bank and putting it in the drawer. So as you'll see by the next slide, that's the journal entry that we will make there. And we did that on April 1st. Okay, now, throughout the accounting period, individuals within the company need to make small expenditures. And so they will go to Lindsay, the petty cash custodian, and ask for some cash and fill out a form and go make their small expenditure, maybe buying office supplies. Then they'll bring a combination of the change and the receipts back to Lindsay. Lindsay does not make a journal entry at that time. We continue on like that throughout the month. Then at some point in time, whether it be the end of the month, the end of the week, whenever it may be, we recognize, or Lindsay, the petty cash custodian, recognizes that we're getting low in cash. At that point in time, we need to replenish the fund and make a journal entry for each of those expenditures. So as you can see by the next slide, we incurred several expenditures throughout the year. It says during April, Kidd Company had several petty cash transactions. At the end of the month, Lindsay, the petty cash custodian, categorized the receipts and compiled the following totals. So Lindsay had many receipts, and she basically put them into 3 different categories and then added them up. Office supply expense totaled $85, delivery expense totaled $120, and postage expense totaled $77. This is all as of April 30th. Also on April 30th, Lindsay counted and there was only $15 still in her petty cash drawer. So what they're asking us to do, or what we would do at this point in time, is prepare the journal entry for reimbursement. Well, we know that we need to go to the bank and get how much money. We always want to bring it back up to $300. Well, if there is $15 in there right now, then we need to go get $285 to bring it back to $300. So you know we're going to the bank to get $285. We're also going to need to make a journal entry to record each one of these expenses here. The office supply expense for $85, delivery expense for $120, and postage expense for $77. So let's go on to the next slide here and show that we debited each one of those expenses, as you can see on April 30th there. And we already said that we have to go to the bank and get $285 because you always replenish the fund back to what it was at the beginning. $300, and there was $15 in there, so it took the $285 there, wherever it is, somewhere in there, it took the $285 to bring it back up. Okay, Have you discovered our problem here? First basic rule we learned way back in chapter 2 was our debits and credits have to equal, don't they? Well, if you add up your receipts, 85 plus 120 plus 77, that does not add up to 285, does it? Our receipts only add up to 282. And so we've got a problem here. We're off by $3. What has happened is we're $3 short on receipts. And that's very typical, where maybe somebody didn't put in enough change or something. We're off by a small amount like this. As I see it, we've got a choice to do one of two things. One, we could either fire Lindsay for being short $3, or we could just debit some kind of miscellaneous catch-all account for any time we are short or over. And that's exactly what we're going to do. As you can see by the next slide, we're going to include as a debit there cash short and over. So that takes care of our journal entry to replenish the fund. So you only make your journal entry when you replenish the fund. Okay? Notice one thing we did not do when we replenished the fund. We did not debit petty cash again. There are only two times that you will ever debit petty cash. One is when you replenish the fund, or I'm sorry, when you establish the fund, like we did on April 1st. The second time you would debit petty cash is when you want to bump the balance up above the current balance. For example, our current balance is $300. Let's say we decide we're going through that too quick and we need to bring that balance up. Well, to bring that balance up, we need to debit petty cash again. And again, let's look at the next journal entry here, and you can see that we want to increase the fund balance by an additional $100 on May 1st. And so to do this, you'll see by the next slide that we will debit petty cash and credit cash. So now we're going to be maintaining a balance of $400. So in summary, to establish the fund, you debit petty cash, credit cash. To replenish the fund after you've used it for a period of time, you will debit all your expenses and credit cash for whatever amount of cash you need to go to the bank to get it back up to its original level. Then the third thing that can happen if you decide to bring your balance up higher, you'll again debit petty cash and credit cash.